Do not trust here. The US stock market shows potential for a significant rebound due to a combination of technical, psychological, and policy-driven factors, though risks remain elevated. So there's extreme volatility, right? Signaling market exhaustion. So recent trading sessions have seen wild swings, including the Nasdaq's 12% single-day surge on April 9th. Its second largest gain ever after President Trump's paused tariffs on most trading partners. Such volatility often precedes market reversals as panic selling exhausts bearish momentum. Analysts like James Smirt of Main Research argue that fear-driven selling and rapid intraday drops indicate a nearing bottom, historically a precursor to recoveries. We also have policy-driven catalysts, right? Trump's 90-day tariff suspension on April 9th reversed a week-long sell-off, sparking a historic rally. The S&P 500 surged 9.5%, its best day since 2008, while the Dow jumped 3,000 points. This intervention temporarily eased fears of a prolonged trade war through, though China's retaliatory 84% tariffs on U.S. goods underscore lingering risks, right? Markets may continue reacting to geopolitical developments, with further tariff pauses or negotiations likely to fuel optimism. There's valuation opportunities, so stocks now trade at about 15x forward earnings, near historical lows, making them attractive to bargain hunters. Major tech stocks like Nvidia, Tesla, and Apple led the April 9th rebound, suggesting institutional buyers are re-entering oversold sectors. Contrarian sentiment, right? Some analysts, including Yardini Research, argue that a deeper crash might pressure policymakers to de-escalate trade tensions. This wall of worry dynamic, where negative sentiment sets the stage for allies or rallies, right, could amplify upward moves if macroeconomic data like inflation and jobs stabilizes. Now, here are the risks to watch, right? You have inflation, right, / interest rates. So persistently high inflation, like 3% versus Fed's 2% target, may delay rate cuts, tightening liquidity. There's earnings pressure, so consumer debt spikes and slowing, businesses. Investment threatening corporate profits. There's geopolitical uncertainty, so escalating U.S.-China tariffs on European trade disputes could reignite volatility. Here are the top stocks that will rebound in May 2025, next month. You have the Nvidia Core, a dominant force in AI hardware. Nvidia is projected to grow Q1 2025 revenue by 65% amid sustained demand for data center GPUs. Despite recent volatility linked to tariff concerns, analysts highlight its crucial role in AI infrastructure spending, with CFRA forecasting 48.7% upside from April 2025 levels. You have Bank of America Core, BAC, anticipated to benefit from pro-business policies and a rebound in investment banking. BAC has 47.4% upside potential according to CFRA. Q4 2024 results showed a 15% revenue growth and a 111% net income growth, with fixed income trading up 19%. We have Palantir Technologies Inc. So the data analyst firm reported 36% year-over-year revenue growth in Q4 2024, driven by 64% commercial and 45% governmental sector growth. CFRA's $127 price target implies 43.4% upside, supported by accelerating AI adoption. We have American Express Co., right? AXP, with a focus on premium consumers less impacted by economic downturns. AXP added, more than 3M new cardholders quarterly in 2024. CFRA predicts 9%, 2025 revenue growth and 55.2% stock upside. We have Morgan Stanley positioned to capitalize on investment banking growth under current policies. MS saw 17% Q1 revenue growth, 45% in equities trading. CFRA's 148 target suggests 36.8% upside. You have Taiwan Semiconductor, a key beneficiary of AI chip demand. TSM's advanced manufacturing capabilities make it resilient to tariff impacts. Analysts highlight its strategic role in semiconductor supply chains. Now, here are the energy stocks that are predicted to perform well in 2025 of May this year, next month. So you have Targa Resources, specializes in midstream energy operations, including natural gas, processing, and transportation. And, analysts project a 29% upside from current levels, supported by strong infrastructure investments. You have the Cheniere Energy, so a leader in liquefied natural gas, LNG, production and export, benefiting from global demand for cleaner energy sources. Analysts rate it a strong buy with a 39% upside potential. We have Baker Hughes, BKR, focuses on oil field services and energy technology solutions. Its diversified offerings positioned it well amid rising energy sector activity. Renewable energy leaders like NextEra Energy Inc., a global leader in renewable energy, particularly wind and solar power, with a stable growth outlook due to its focus on clean energy projects. There's Bloom Energy Corp., a key player in green hydrogen and fuel cell systems, catering to decarbonize industries like shipping and steel production. We have Gevo Inc., right, produces sustainable aviation fuel and renewable natural gas, aligning with the global push for lower emissions in transportation. Now, here are other strong performers. You have Chevron Corp., a traditional oil and gas giant with a 15.5% year-to-date performance, benefiting from high crude oil prices. You have Hess Corp., achieved in 20.1% performance in 2025 so far, driven by strong exploration and production results. You have Equinor ASA, a major player in both traditional oil and renewable energy sectors, offering diversification for investors. Now, there are tech stocks as well that are expected to rebound next month. Like, beaten down tech stocks poised for recovery is Jabil, which is, and Keysight Technologies. Highlighted for, comprehensive portfolios and AI integration, with analysts citing undervaluation relative to growth prospects. Akamai Technologies, positioned for recovery with a 6.09% long-term growth outlook and improving earnings estimates. Universal Display Corp., OLED and Pinterest, benefiting, from ad tech and display innovation trends, respectively. Now, there are tariff-impacted rebounds like Apple and Alphabet, like the Google, right? Rebounded 2% and 1% on April 14th after tariff exemptions for electronics, those supply chain challenges persist. We talked about it. NVIDIA, recovered partially post-tariff guidance, but remains volatile due to geopolitical risks. Now, there are high-growth opportunities like InnoData, right? AI-focused data engineering firm with 127% year-over-year revenue growth and 572% 12-month momentum. You have CleanSpark, Bitcoin miner leveraging energy infrastructure expansion, reporting 735% EPS growth. You have Super, Microcomputer, 20%, plus revenue growth driven by AI server demand. Now, here are the top stocks in the healthcare sector expected to rebound in May 2025. So the top, healthcare stocks, you have Pfizer Inc., currently undervalued. Pfizer is poised for growth due to its oncology pipeline and cost-saving measures following the decline in COVID-19 vaccine sales. Analysts highlight its diversified portfolio and strong dividend support. You have, Abbott Laboratories. So this is a leader in medical devices. Abbott is positioned for growth with innovative products and consistent earnings, right? So, performance. So its upcoming earnings announcement on April 16, 2025 could further boost investor confidence. You have Eli Lilly and Co. So Eli Lilly, continues to benefit from its strong portfolio of specialty drugs, including treatments for diabetes and cancer, right? Analysts project a 27.8% upside potential driven by robust product demand. We have Thermo Fisher Scientific Inc., known for its life sciences tools and services. Thermo Fisher is expected to grow due to its involvement in biological medicine and innovative laboratory solutions. So analysts predict a 25.3% upside potential. You have United Health Group. So United Health remains a key player in healthcare, insurance, and services, with analysts highlighting its resilience amid sector challenges, right? We have CVS Health Corp. So CVS is rebounded, it has rebounded strongly in early 2025, followed improved performance for its, Aetna insurance arm and pharmacy business, with shares up 41.41% year to date as of February. Emerging opportunities is Amgen Inc., Amgen is benefiting from double-digit growth in its drug portfolio and exposure to AI-driven healthcare solutions. We have Boston Scientific Core, right, focused on cardiovascular devices. Boston Scientific has a strong pipeline of innovative products that position it for long-term growth. You have Humana Inc. So Humana's focus on Medicare Advantage plans makes it an attractive investment as utilization rates improve post 2024 challenges. Okay, so that's what I have for you today. Take a moment right now to hit that subscribe button and the like button. If you gain value from this video and you appreciate this content, you want more videos like this, let me know that by hitting that subscribe button and the like button. See you on the next video.